term permanent establishments, as I mentioned, like what we provide in the OECD model treaty, and this is the exemptions. This is the Article 5.4, exclusion from the PE. This is, again, as you can see here, any activity which has a preparatory or auxiliary character must be excluded from the definition of permanent establishment. And Article 7.1, this is also relevant to the case. It is saying that the profit of enterprise of a contracting state shall be taxable only. I think this is the same with the OECD provide in Article 7.1. But again, this is the very important thing, the last paragraph. If the enterprise carries on business as ever said, the profit of an enterprise, the enterprise may be taxed in the other state, but only so much of them as attributable. So you can see here attributable principle, attribution. So if it is not attributable to the PE, then no income to be taxed. And if the source country have a right to tax the PE, then it must be limited to the amount of the attributable. Or this is, we call it as a force of attractions, or to the sale of goods or merchandise of the same kind of those sold, or to other business transaction of the same kind as those affected through the PE. So I think the tax auditor try to quote this force of attractions, so that's why they make an adjustment on the CIT. Okay, Pak Putu, that's all I want to share this evening to all the participants. I think we may move to discuss this case. Thank you very much.
Thank you very much, Mr. Ruston. This is a really good discussion right now, and we already have like expanding business in foreign countries need representative office, subsidiary, and permanent establishment. Also, you have already remind us about few article like Article 5 and 7 on OECD model tax convention. And right now, this is the time we have Q&A session. That is might be interesting also for everyone. This is, I think we need a little bit time for everyone to take a look for the slideshow. Would everyone just replied me, have you all, the participant already have the slideshow from Mr. Ruston? If not, then please let us know right now by raise hand or something like that. We can share again in the group or WhatsApp that we have also. Please, Ibu Debbie, help also to share our slideshow to the participant. Thank you. We will have 5 minutes for that.
Pak Putu. Pak Putu tidak ada suaranya ya?
Sorry, Pak Sony. We
Tidak
have
ada suara tadi.
we
Oke,
have 5 minutes to everyone to take a look again the slideshow, and then
oke,
in 5 minutes we will have a Q&A session. So please raise hand. First rise, first serve. Thank you very much.
oke. Thank you, Pak Putu.
Okay, thank you very much. Pak Bambang is the first raise hand. Yeah, I think please introduce also Pak Bambang. Yeah, we already knows.
Hi, good evening, Pak Putu. Thank you for this chance.
Here.
First of all, also I would like to thank Pak Ruston. Actually, I raised hand just to inform you that I haven't got the material, the slide.
Oh, sure.
Yeah.
We will share right now. Would you mind Ibu Debbie to share to Pak Bambang, please?
Thank you, Pak Putu.
Sure.
Apologize. Maybe the other can share because I using tab.
Pak Bambang, would you share your number so I could share by WhatsApp right now? Thank you.
Okay.
There is a PPT already, Pak Bambang.
But I already informed you the.
No. I mean, in the WhatsApp.
Oh, okay.
Sorry, in the
Chatting, yeah.
chat room. In the Zoom chat room.
Okay. Good. Thank you. Pak Putu, excuse me. Pak
Yes,
Putu,
Pak Bambang.
may I become a volunteer, the first volunteer?
Sure. We are really appreciate with that.
Yeah. Actually, this case is what we call is like a general secret. Yeah. is is often happen in the field, and also although it is still important, interesting, even though to me it is uh, quite gray. Yeah. But we know that at the end is rely on the judge in the tax court. Yeah. The problem is if the tax office have many information from the buyers, yeah, like Pak Ruston mentioned in this slide. But I think the important thing is the question that provided by Pak Ruston is the three question. I think question number 2 regarding the FOA, I think it is totally wrong. Yeah, because RO itself does not sells the good. Yeah, I think it's the correct way to the tax office just determine that the sales of head office to Indonesia is the sales of the PE itself. Yeah. And number three, I think it's fair, yeah, because my understanding they consider that the income is subject to final tax, and the presentation in the tax return or the tax in the tax calculation usually like that, yeah. The income allow as the income, then is adjusted by negative adjustment, become zero because it's already taxed by the final tax in nature. I think that is my first comment, yeah, just to raise the others, I think. Thank you.
Thank you, Pak Bambang. I think maybe there is a comment also from Pak Ruston, perhaps about what Pak Bambang already give to us.
Do you want me to give response directly to this comment or just wait other participants to think over?
I think we should wait a little bit, Pak Ruston.
Okay.
Okay, there is a question in the chat. Ibu Ratu Dini, the asking about, may I ask about OECD? Sorry, I let join. May I didn't listen. How can the OECD influence the economic policies of its member countries? Maybe Ibu Ratu, could you please, perhaps we can discuss also about this. Ibu Dini? Oh, Ibu Dini maybe not. Oh, in the car. Okay, okay, okay. That's fine. We will record your question here, yeah. Ladies and gentlemen, this is already past the 5 minutes already. Would you, everyone have activate the mic? Perhaps we can discuss about this. If you have any question, mandatory for us also in this English club discussion is about to encourage everyone to speak English and be conversation with everyone here, yeah, especially to Mr. Ruston Tambunan as a speaker here. We want to share because the text is our expertise. Everyone have the expertise in the text. So it is better to have discussion like a forum group discussion right now. Yeah, please, everyone. I hope also Pak Sony, Pak
Okay.
yeah, please.
Yes, Pak Putu, I want a question to Pak Ruston. Good evening, Pak Ruston. Pak Putu also.
Good evening, Pak Sony.
Hope you
Yes, good evening.
and wishing to continue success ya Pak. Long time no see, Pak Ruston.
Yes. Happy to see you again.
Since Pancasila University, I think, MOA, member of understanding, you signing over there. Remember that?
Yes, I remember.
Okay. My question, this is relation to preparatory or auxiliary activities, sir. I need your suggestion and affirmation. Why does it matter? If representative office only engages in preparatory or auxiliary activities, it is not deemed a PE or permanent establishment. Is it right, Pak Ruston?
Yes.
Okay. Therefore, no income tax liability arises in the host country. But if it crosses the line, for example, by conducting sales, signing contracts, or managing operations, it can be reclassified as a PE with full tax obligation. Is it right?
Okay.
Okay, this is based on Minister of Finance regulation number 213, I think, year 2016. This is related to special relationships, the principles of fairness and customary, I think, yeah, business practices. Okay, thank you. And next, my questions are, how can companies draw a clear line between auxiliary activities and core business activities in practice? First. Second, okay,
Okay.
what kind of activities by a representative office may raise concerns from tax authorities regarding PE status? Two first, please.
Okay.
Thank you. And once again, it's okay.
Sorry, Pak Sony, could you repeat it?
Yeah, I want to ask three questions. What are, this is based on your slide, yeah? What are the best practices to mitigate the risk of being deemed a PE for representative office operating in Indonesia? Thank you. So there is three questions. The first for the practicals in Indonesia to avoid and to different preparatory or accelerate with the main business in practice. And the second, activities by representative office may risk concern. So the risk, yeah, what kind of risk? And the third, this is relation to compliance strategy. Compliance strategy, yeah. This is, yeah. Thank you, Pak Ruston.
Well, thank you very much, Pak Sony.
Thank you, Pak Pustu.
I think there is a three question already, yeah. We need to give the time for Pak Ruston also to explain about this.
Yes, thank you.
The first question is from Pak Bambang, yeah, Bambang Pratikno, and then the second is from Ibu Ratudini. I think the easiest one is Ibu Ratudini can be explained this earlier by Pak Ruston. This is depend on Pak Ruston later on, yeah. And there is a three question from Pak Sony also. This is will be yeah, we give a time for Pak Ruston first, and we will come back. Please, Pak Ruston, if you are ready, let us know. Thank you very much.
Okay, thank you. So I think I will answer in one by one. First, Bambang, I think he make a comment on number 2 and number 3 regarding the tax impact of the permanent establishment as mentioned in the discussion points. But I see the questions also through the chat provided by Pak Bambang. I think maybe I can also answer this first. What do you think, Pak Putu?
Would be great, Pak Ruston. Thank you very much for that.
Okay, thank you. So Pak Bambang also mentioned or raised a questions to the chat. And the question is, what is, in short, what is the meaning of effectively connected? Because it is saying in this presentation that it is very important, especially if the income deal with Article 7, then other article will be applied. So it is true that we prefer to apply other articles than Article 7. So in terms of the business profit, other articles will be called as a specialized against the general rule in Article 7. So as I mentioned earlier, Article 12, Article 8, like shipping and independent personal service, like artists or athletes, that's the kind of the business as well. But Article 7 is not applied. So to tax those kind of income, no need to have a permanent establishment first. So no PE, no tax rules is not applied to those other articles. Then Pak Bambang also mentioned that there is a special provision article of passive income. For instance, interest. In case there is a PE and the interest has effectively connected with the PE, then the interest will be subject to Article 7. Yes. So if the interest income directly earned by the permanent establishment, of course, Article 12, interest is Article 11. Article 11 is not applied. So no reduced rate because it is included in the permanent establishment income. And the same thing also if the interest is effectively connected to the PE. So what is the meaning of the effectively connected? Actually, there is no clear definition in the OECD commentary, but we can see from the domestic law, like why an interest could be imposed to be taxed as a business profit at the Article 7 to the PE, just because of the interest is directly or indirectly connected to the PE. What is the example of this case? Saying that one of the company in Indonesia built like a factory in Indonesia, and the main contractor is coming from Japan. The main contractor is coming from Japan. So because of the durations of the constructions is more than 6 months, then it will constitute a PE. So Japan Corporation will have a PE in relation to the building of this factory. At the same time, the Japan Corporation also give the interest, the loan to finance the project. So we can say that it is effectively connected with the PE. That's why it is force attracted to be as a income of the PE, and Article 7 will apply. Article 7 means that all the interest will be included the income of the permanent establishment. So no, Article 11 of the interest will not apply in this case, as long as the passive income is attributable or effectively connected to the permanent establishment. This is the exclusions in, I think, all the passive income, Article 10 dividend, Article 11 interest, and also Article 12 for the royalties. That's my answer to the questions to the chat. And then I have to refer to the answer of the Pak Bambang in this case. Let me check. Okay. You still see my slides in this?
We are still what?
Okay. Let me check. I don't see my. Just I stop share first. Okay, Pak Bambang mentioned for the point 2 is the adjustment on gross sales CIT by the GT based on the force of taxation rules justified as correct. Pak Bambang said that this is not correct. I think I agree with Pak Bambang, because if we refer to the tax treaty between Indonesia and Korea, Article 7, it is clearly said that the attributable to the establishment or to the sale of goods or merchandise of the same kind of those sold, or to other business transactions on the same kind of those affected through the PE. So I agree with Pak Bambang that because the PEs not sell anything product in Indonesia, so I think there is no reason for the DGT to assume that the goods sold by the headquarters will be the same as the goods sold by the PE, because PE sell nothing. So I think I agree that actually a force of attraction rules in this case is not applied. It's totally wrong based on the tax treaty. You cannot compare the one headquarter maybe produced some goods and then sell it out to the customers in Indonesia, can be compared with the limited activities in through the PE, which is not selling any goods in Indonesia, so cannot be attracted to be income of the PE. That's my comment on Pak Bambang, which is I agree with the comment. And number 3, the DGT made 2 kinds of adjustment for the same object, income Article 15 and CIT on gross sales. Is this proper under the provisions? Correct me if I'm wrong, that I think Pak Bambang agree on this. Am I correct, Pak Bambang? Do you agree with this
Yes,
adjustment?
yes,
Okay.
Pak Ruston. Just in the sense of the presentation of the calculation only.
Okay.
Yeah.
Okay, Pak Bambang. So,
Thank you.
in my opinion, maybe other can also contribute their thoughts. In my opinion, the CIT, the tax liability of the PE in Indonesia, especially in this case, if it is true, a PE of the trade office representative that constitute as a PE, then Article 15, actually, this is the actual tax liability of the PE itself. So there is nothing to be reported again in terms of the CIT, because what if we see the construction services or property services, they are subject to the final tax. Okay, so if there is sales that not yet deducted or not yet self assessed or self-payment by the contractor, the adjustment made by the tax or auditor always be limited to the Article 4.2 final tax. No more any adjustment for on the CIT, because if we can say in simply sentence the Article 15 itself, it is the CIT, but through the final tax. So it is useless that the tax auditor make an adjustment at the same time, the positive adjustment and a negative adjustment. That's the meaning of the adjustment, because already provided in Article 15. Why Article 15 is regulated in our tax law? Because the background behind this, because the existence of the PE already, I mean, the existence of the sales and cost is booked in overseas, because the PE here only treated as a PE, but any sales and any cost of goods sold and other operating expense is booked in overseas. So because it is impossible to tax on the net taxable income, that is why, for the simplicity, we government, Indonesian government, Ministry of Finance just treat, to make it simple, on final tax through the Article 15, 1% taxable income of the all gross export to Indonesia. So I don't see any provision that allow to do 2 times adjustment. Article 15, at the same time also to Article 7, gross sales in terms of the CIT. Because in my opinion, the CIT itself, it is in the final income tax Article 15. That's my comment on this. Maybe other friends can add or comment on this. If not, then I will continue to answer Ibu Ratu Dini questions. Actually, your question is broad economic policies. How OECD member can, or how OECD can influence the economic policies of the members. I think that's the questions. I think OECD divided by many divisions. There are OECD not only deal with the tax aspect, also in economic and development. Because our OECD itself is Organization for Economic and Development. So, but of course, OECD can influence, even though maybe not major or significant influence. But for the tax perspective, we can see now, because how OECD can influence part of the economic policy. If we agree that the tax policy also part of the economic policy is, then OECD 2-pillar solutions, global minimum tax can influence how the business will be taxed, influence the economic policy, influence the tax policy. Why I say that? We know that the principle of taxation is we call as an equity principle. You know, equity principles, there are 2 aspects. One, the horizontal equity, while all the same income should be taxed equally. All the same taxable income should be taxed equally. While the vertical equity, the more income, the more tax to be paid. So the more the richer someone, the more the tax to be paid. We call it as a vertical equity. And if the company get lost, then no tax to be paid. But why by global minimum tax, it could be possible that the OECD framework, OECD publications, OECD consensus can influence how the tax policy, because in our domestic tax law, if a company get lost, it then no need to pay tax. But by global minimum tax, of course, through the specific calculations, global income, it is possible the lost company can be imposed to pay tax. Another thing about the tax incentive. Tax incentive is also economic policy. We want to attract the investment from the overseas by providing tax holiday, super deductions, tax allowance, and everything that make a foreign company who invested in Indonesia don't pay tax in up to the 20 years. But by global minimum tax, it will be impacted because why? Below than 15% will be top up to the minimum tax of 15%. So the all companies who has the incentive may be imposed to pay the tax. So of course, this is also kinds of how OECD can influence not only members, because up to now we also Indonesia is not yet a member of the OECD, even though we know that we are willing to join the OECD after we join the BRICS. So I think that's the small examples how the OECD can influence the economic policies of the members or even non-members. I think that's my answer to the question of Ibu Ratu Dini. And for the Pak Soni, let me just wrap up to answer as one comprehensive answers on this. Actually, it is not in practice very easy to define exactly what is the auxiliary and or preparatory, because to be honest, I say that this exemption clause also used by the tax planner to avoid tax in some countries. They are trying to avoid the existence of PE by perform any activities that fall with the Article 5.4. So at the first, maybe the rep office only make research liaisons officer, that's bridging communication between the headquarters with the customers, assist the PIC from the headquarters when they want to meet and visit the customers, potential buyers.
Yeah.
But maybe later they go far from that. So not only do the market research, but also make a negotiation, even though later any contract signed by the head office. So if we see here, we refer to the other articles in the UN model, it also have a risk to be constituted as a PE and deemed as an agents, PE, dependent agents. You know that dependent agent also fall within the meaning of the permanent establishment. But again, once the rep office do the all, I mean, do the things, perform any activities that exceed the limit stated in the tax treaty, of course, it is very risk to be deemed as constituting a permanent establishment by the tax auditor, because you know, permanent establishment is a threshold to tax profit. But unfortunately, the tax auditors always have a very suspicious mind. In their mind, any rep office in Indonesia must want to avoid tax in Indonesia. But I think that's not always like that. Because why? Investment Coordinating Board, even they also provide and give a permit and license to establish trade office representative or rep office with some limitations. For any representative office or trade office representative, they are not allowed to do any activities that generating profit. It is very clear in the regulations. But if we connect this kind of regulation of investment coordinating board, it is not always be connected or harmonized with the meaning of the office in for the tax purposes, because in the tax treaty there is no divisions, there is no grouping on whether this is the rep office or trade office representative. As long as this representative office do or perform any activities that exceed all the activities that is having auxiliary and preparatory characters, then it will be deemed as a permanent establishment. So if they sign the contract, if finally the tax auditor conclude that the people here also make a negotiations, it is far more than the auxiliary and preparatory character. So it will be, and I agree on that, if they make any activities that exceed the auxiliary and preparatory characters, then it will be constituting as a permanent establishment where they have to pay tax based on the Articles 15. They will subject to 0.44% or lower as referred to the tax treaty rate of the branch profit tax. So so what is the best mitigate? How to mitigate the rep office to be a PE? Of course, you in practice, a taxpayer, a rep office must have a strong arguments and also strong evidence just to prove that they only conduct any activities that fall within the exemptions activities of the PE, which is characterized as auxiliary. So if it is only anyway, it is very not similar to clauses of the Article 5.4. It depends on how to whom we are assigning the treaty. For instance, tax treaty between Indonesia and France or US, it is saying that even though you advertise and promote your product, it is not fall within the Article I mean, not fall with the permanent establishment, but it is excluded. But with Korean, there is no advertising. If representative office in Indonesia coming, I mean, the headquarters in Korea, do the advertising, it will be exceed the limit of activities to be constituted as a PE. So they will be subject to the permanent establishment. So we have to see the real treaty. We are talking about the model treaty in general, but how to avoid to mitigate a risk for the rep office to be constituted as a PE, it has to be look at the real treaty with to which country we are signing the treaty. So, but again, for me, as long as we can prove that the the rep office only do the limited services or performance in Indonesia, and the activities within the auxiliary and preparatory, it will be safe, and I think we have a strong arguments to defense. In many cases in the tax court, I see that so many cases give in favor to the taxpayers because again, the tax auditor has to have the strong evidence to say that, okay, you are doing anything that exceed series of the activities, exceed the activities on auxiliary and preparatory. So, Pak Sony, I think it always be like disputes all the time. Yeah, I understand, but again, we hope that we can defend help much in the tax court as well as in the Supreme Court.
Yeah,
it is difficult to get to make understand for the the level of tax auditor or the objection level.
yeah.
That is why
Right.
this is why I one of the topics I raised in this evening,
Yes, sir.
just because of this thing. I have
Yes.
I have written the article maybe 10 years ago about this in context.
Okay, I will read this. Okay,
Yeah,
yeah. Pak Ruslan, thank you very much. I absolutely agree with your completely explanation. Amazing. Thank you, Pak. Possible with one question.
yeah.
Putu, it's what time's remaining?
We open it, Pak Sony, please.
Okay, thank you.
Please.
Just one, Pak Ruslan. This is relation to risk analysis. Listen to analysis this. What are the main risk indicators that the tax authority considers when asserting PE status on a non-sales representative office? So, what kind of indicators? This one. Okay, thank you, Pak Ruslan.
Okay, can you say that again, Pak Sony?
Okay, what are the main risk indicators that the tax authority considers when asserting PE status on a non-sales representative office?
Okay, Pak Sony.
Thank you, Pak Ruslan.
Yes. Anyway, I read so many tax disputes about this. It always be the tax auditor saying that if the PE exists quite long, then they will have a suspicious mind that why so long? Why don't you decide whether to establish a permanent establishment or subsidiary? I think this is very basic. It is too yeah, too suspicious
Yeah.
in mind, because
Yeah.
as long as the tax treaty saying that any activities fall within the auxiliary and preparatory, and then it is not depend on how long. Even maybe all the time they will choose to be only a representative office if it is more favorable for the foreign countries. Why why should they establish a branch or subsidiary
Yeah.
if within only establish to keep the representative already make them happy or think that it's enough for them. So uh, it doesn't mean that rep office must be end up with the establishment of subsidiary
Okay.
and establishment of the branch. That is why, even though in the case, even though 15 years or 80, even the 20 years, as long as all the activities is only part, a small part of the all the supply chain, then fall within the auxiliary and preparatory character. I don't think because there is no certain regulation that must be considered as a permanent establishment if the representative office exceed maybe more than 5 or 10 years.
Okay.
There is no relevant with that. And the second thing is they also concerned about the number of peoples. So it seems like if you all have only as a representative, you have enough. If you have only 5%, more than 5%, then they think that you must be doing more than auxiliary and preparatory, because maybe you need to negotiate to so many customers. But there is a case that a foreign company in headquarters sell out so many different products, so they need so many specialized on that. So that is why maybe for this 5 trillion, I think 29 rep office is quite small if you compare to the number of the sales. You see, 5 trillion. So because they have so many kind of product, so that's why maybe 29 is not enough. Maybe they need 50 to reset all kind of the company in all the island of Indonesia, which is quite large. So again, if we refer to the positive tax laws, there is no regulations that prohibit representative to have more than 20 or 30%. But in many cases, I see the tax office still stand on this. If you exist for the certain years and you have employees more than maybe 20, then they will try to see to make a justification that you are not only preparatory and auxiliary. But in many cases, no enough evidence from them. So that's why they lose the case in the tax.
Okay.
Sorry.
Amazing. Amazing explanation. Thank you very much, Pak Ruston. You're a very expert. Okay. Thank you, Pak Putu. This I think is enough for my questions. Maybe another Pak Bu Ratna or Bu Lily.
Yeah, thank you very much. It's a very interesting topic actually that we're listening.
Okay, Pak Bambang, you are present.
Okay. Thank you, Pak Putu. Pak Ruston,
Yes.
add one question.
Okay.
I think also important. The questions regarding the activity of rep office, the people in the rep office, as we know that for the avoid consider as a PE, just mentioned they just provide the information for example. But the problem I have experienced that in the rep office, people got the commission from the head office. So, what do you think about this?
Okay, Pak Bambang. If you talk about the commission, it depends on how, if the commission is related to the achievement of the sales, then it is very risk that will be constituted as a PE.
Yeah, that's related
yeah,
to the achievement.
it means implicitly that the guys make an activities that generating profit, generating sales, and this is not allowed actually by investment coordinating board, and also exceed the auxiliary and preparatory character. So if they find, because actually the rep office only funded and financed the operational, only limited to the salary. But if it is found that any commissions booked in the representatives accounting or bookkeeping, and even also deducted by Article 21 on the commissions, it is very open. It is very easy to define that actually the employee has an activity more than the auxiliary, especially if the commission directly related in percentage to the sales. So I think that's the tax auditor will most probably deem this rep office as a permanent establishment.
Although the activity does not negotiate or conclude the contract, Pak Ruston.
Yeah, because they see the substance. Why someone get commission on sales if do nothing related to the sales? How to get the sales? Of course, not only praying at the office, but they have to come and negotiate and offer everything in there. To avoid dependent agent also, some companies do like that. The people make a negotiation, but the contract signed by the head office. It is also fall within the dependent agent if the tax auditor find that these guys are making negotiations. So it is very simply to define, as long as the guys in the people or the employees in the permanent in the rep office do such activities like sales and any sequence of activities that generating sales, and at the end of the day, then it will be considered as doing activities more than auxiliary and preparatory, so that it will be deemed as having a permanent establishment.
Okay, thank you, Pak Ruston.
Thank you, Pak Bambang.
Thank you very much, Pak Bambang, and the explanation from Pak Ruston. We hear about how to get commission is not praying in the office, ya Pak ya. That is a good quote tonight, ya. Okay.
Yeah.
Okay.
Pak, I have questions, Pak.
Oh,
Lily.
Lily.
Ya,
Yeah.
Ibu Lili, silakan.
Just want to update the latest situation right now, Pak. In the
Okay.
past, actually the Foreign Trade Representative Office, for example, 0.44% at that time, is only applicable for representative office, which is from the non-treaty country,
Yes.
except for few foreign country, we choose to be subject to this 0.44%, including Japan.
Okay.
I want to know whether it is still applicable now, or whether there is already a change in this regulation.
Okay. Ibu Lili. Can I answer now?
Yes, sure. Thank you so much.
Yes, even though in the tax code and up to now it is still applicable. So actually, it is also debatable anyway, because actually the PE should be in the non-discriminations. Means like if we tax on the net income, then for the PE, it's always be also the same treatment to other sectors. But again, we have also a PE for the construction services.
Yeah.
As long as the residence contractors company subject to final tax, and then foreign company also treated as the same final tax, and no discriminations used. And now it is still applicable, but it is sometimes very awkward, very strange, while some of the tax auditors still maintain the rate of 30%. While now, we already in 22%. On the regulations, is still saying that the basis to calculate 1% for the tax payable is 30%. But in practice, I also experienced in last time when the rate already reduced to 25%, then the tax auditor also follow the corporate rate, 25%. And now also 22%. But in the Ministry of Finance, the decree, as well as the decree of Director General of Tax, still saying 30%. There is no further regulation that you have to adjust to the existing rate. It is very funny as well anyway. But refer to the tax treaty. The tax treaty delegation is only to the branch profit tax. In the branch profit tax 15%, and then we have of course times with the 15%. But in our case, the branch profit tax in the treaty between Indonesia and Korea is 10%. Then we get the figure. But again, the tax auditor already considered the change of the corporate income tax rate from 30% to 25%. It should be now to 22%.
Thank you, Pak.
Thank you, Bu Lili. Pak Putu, back to you.
Yeah, this is already 9 p.m. Maybe this is the last call, yeah. If anyone, I give like another 1 minute to any discussion. Then this is already 2 hours with Pak Ruston Tambunan, and this is a good.
That's too much for me. Anyway.
Thank you, Pak Ruston.
Sorry,
Thank you.
I have the question.
Sure. Silakan Bu Dewi.
Yeah, thank you, Pak Ruston,
Oh,
for your explanation. You can as speaker in our English club. I have the case. I confused, to be honest, to choose where is we use the rate in tax treaty or in SA, ya, surat edaran, because we have the guidance from SA, but in the tax treaty different rate where we used to rate for using Article 15 for representative office. Thank you.
okay, thank you, Bu Devi. Actually, there is no special rate for the business profit. We have a certain rate for dividend, interest, royalty. Yeah, I think that's the main article that saying the profit. But for the business profit, how to tax the business profit? It depends on the source country. That is why if we refer to the tax treaty, we quote the tax treaty only for the branch profit tax. If of course there are some articles in the tax treaty that's providing branch profit tax. If not, then we use the 20% as referred to the Article 26. So for the rep office, the profit, as long as already meet the requirement of permanent establishment, then the host country have a right to tax the profit. And how to tax the business profit, it refers to the domestic law, not refer to the tax treaty. While we refer to the domestic law, we still refer, because we calculate the 0.44% based on first, we deem the taxable income 1%, right? Then we multiply with the 30% before. Then after that, then we add the branch profit tax. And how to 1% minus 30%, then we apply the branch profit tax. How is the rate the branch profit tax? If it is the rep office is coming from the treaty partner, and then of course, because the branch profit tax also available in the treaty, we apply limited to the branch profit tax, but not the single rate provided in the tax treaty. That's my answer, Ibu Debbie.
Thank you for your explanation,
Thank
Pak
you.
Ruston.
Thank you, Ibu Debbie.
Okay, ladies and gentlemen, this is already 21 past 12.
Yeah.
I think this is already 2 hours with Ruston Tamunan, and thank you very much for your sharing, Mr. Ruston.
Thank you.
And then thank you very much also for all the council that already preparation of this event, and we will glad to have this next. Maybe also Pak Ruston will be. Would you mind also become our next speaker? Yeah, we will
Yeah,
share.
so
Let's see, because there's so many topic of international taxation anyway.
yeah.
This is
Yeah.
only one of the thousands.
One of the thousand, yes, exactly.
So many.
Yeah, thank you very much. I think this is the time we have to close. Before of that, maybe Pak Sahata as our chief of IKPI Jaksel, you want to give a little bit speak, and then we will take a picture or photo together. Please, Pak Sahata, if you have a thought.
Thank you, Pak Putu. Thank you for everybody that can join this session, and we would like to thank for Pak Ruston for sharing the knowledge. Actually, the reason we do it is just only for practicing English. So we hope that we can achieve. And then I think next will be, because the participant is 46, yeah. 46 or 47 since the beginning, then nobody left, only one left. So it's a good presentation from Pak Ruston. And then my suggestion is, I think we can collaborate with other brands. So this will be national, so we can grow it together in English. So that's my suggestion to Bu Debbie and all the team, so we can collaborate with other brands. So more audience, I think we can extend our membership on the Zoom, so we can support. And then we thanks for Pak Putu, for the moderator, Bu Lili for the opening speech, and then Bu Debbie, they arranged this one. And then for all audience, let's meet for the next session for our English session in arranged by IKPI Jakarta. So thank you, and then I'm closing, or you return to you, Pak Putu.
We take a picture first,
Okay.
Pak Sata.
So, yeah, thank you for everybody. Then good night.
Thank you, Pak Ketua.
Thank you, Pak Ruston.
Baik, yeah, right now we want to take a picture. Would you mind, everyone, ladies and gentlemen, you turn on the camera, then we can take the picture one by one. Okay. First of all, yeah. 1, 2, 3. Okay. The second row, I will take a picture. There is Pak Jordan also joining. Okay, 1, 2, 3. Baik, thank you very much, everyone. Ladies and gentlemen, we will close this Zoom right now. Thank you very much for Pak Ruston and all the teams who supporting and all the participants. The next English club will be informed as soon as possible in the group because we have already group. Then good evening, everyone, and thank you very much.
Okay.
Thank
Thank
you.
you.
Thank you.
Bye.
Terima kasih, Pak Ruston.
Thank you.
Thank you, Pak Ruston. Thank you, Pak
Thank
Putu.
you. Thank you.
Pak Ruston.